Hi, Warriors. It's Thursday. Mike's out of town, so I'm going to be doing an update, keep you guys informed. I want to talk about the inauguration and how that may impact markets. It's come to my knowledge that there are at least 100 executive orders ready to go uh, on Inauguration Day. So there's a lot of risk. Guys experienced FX traders like Mark Chandler are saying this is bigger than a Fed day. So there could be a lot of dramatic impact. You probably want to, I know guys that are not trading dollar pairs are trading crosses outside of the dollar for that event. So there should be some caution. I just want to, you know how I say, keep an open mind, can keep your account open. When I look at the euro, we have one more day left for the week. But if we start closing back underneath the wedge line, say 102.50, which was yesterday's low, it opens the door for a third drive to 101.5. That'd be a buying opportunity for me. So if the dollar surges on any tariff news, I'm a buyer down here. I'm going to stay long a little bit in case we do hold and head back up. But I do believe that let's just look at let's look at euro. We were higher on the week for reversal week. I'm not sure if we still are. Yeah, it's not impressive. It's kind of sideways. We didn't get to the off number, although we could. If the euro closes back over 103.09, which is only 40 pips tomorrow, you got it. Otherwise, I think we're going to test that line. The other reason was you guys know that I've been looking for one more new high in Canada to clean out the stops over this rectangle, and that the stops will be taken out at 144.43. So we're only 50 away. I think we're going to head into the 45 handle. So that's another reason for some caution on the dollar top cable. Not sure if it's going to make a new low. I would assume that if the RSI, that was the other reason. This RSI in cable is not great at 20 that we bounce. So possible we could still see a new low. Next low would not confirm like this one. Similar for the euro. This wasn't a great reading. Was still under 30. I do believe if we wash to 150, it could be fast with a spike, and that will hold above the 30 level should that happen. That also puts back on the table the Aussie break, that maybe this wasn't the low, and if we get a break to new lows, I'm a buyer there as well. Aussie, not doing that great considering what copper has done, considering what's happening with think equities, gold, right? Gold's been strong, whereas Aussie. Copper's been strong, whereas Aussie. So we'll see what happens there next week. This was a big trade for us from last Friday. This was last Friday. I don't know if you could have taken profits. Was 400 pips. Can't make money on a call that you were prepped for before it happened on Friday. Even though my power was down, I couldn't do the broadcast. I'm not sure. Oh, I did do the broadcast here. I couldn't do my earlier routine. So, I think the highs are in here. I don't think we're going to make a new high. So if the dollar makes a new high, most likely US dollar yen is going to be a failing rally between 7 and maybe 7.5. Eventually, I think we're headed much lower. 52 is going to be a big area. But here, I think we do have a reversal week. So, uh, and I'll also go to the dollar. Look at the difference in relative strength between a week like this that we have in the yen and a week like this, which we have in the dollar. So, unless the dollar closes back under 108.92, we were there yesterday before it held. but we're not there now. So really your line of demarcation, line in the sand now in the Dixie to really know it's starting to do something wrong would be closing back under 8.5. So, if you're not short the dollar, you could put a little on this rally at 9.5 and be ready at new highs to maybe try it at, 110.30, 110.50, because it may not. I mean, we could still break down. I am still a long-term dollar bear. What also bothers me, just like the euro bothered me with its RSI reading, that although on the daily we did diverge, and even if we make a new high, we'll diverge again. See that? We diverged, and it was under 70. But the 4 hour bothered me, where we had really almost a confirmed high up here, near 80. So if we could get another high, maybe this wasn't 1, 2, 3. Maybe it's 1, 2, 3, and one more high. So we'll see what's going to happen there. If I'm right about the dollar rallying, then I could also be right about what might happen here in NASDAQ. So I just want to show you guys. I bought some June SQQ puts calls. Looking for SQQ to head up. It's a bearish ETF. And look at the difference between the rallies in S&Ps, which 59.77 was 61.8. We got above that. And then compare it to NASDAQ, where we could only get back up to a 50% retracement. So it's very possible we could fail from here, and that this might be the last bus stop before that happens. So I'm still remaining negative on the market. Think there's one more shoe to drop. The Mag 7, had great days yesterday. A lot of them did. Oh, yes, and Bitcoin. So Bitcoin is trading right at the descending triangle level right here. So it had a better rally than the S&Ps, but look at that, what kind of day we're getting here. So although a lot of people are saying, just like in the S&Ps, this was a trap, they're trading almost identical to each other, that maybe this time we get the breakdown to 75, but it's right at the descending triangle line, and so far being rejected. We have the Mag 7 lower. So, there's Amazon, it's lower, Apple's lower after having a good day yesterday, Meta's sharply lower, Google lower, Netflix recovering, but looks like the top's in. Microsoft's trying to recover, but I think it's going to have trouble here. Nvidia's trying to recover, got up to 140 last night. We'll see what happens at 140. So I remain bearish, more NASDAQ than S&Ps. Okay, I think that the first break showed it. It was a bigger break in the NASDAQ than it was in the S&Ps. All right, so let's talk about bonds. Mike and I Tuesday talked about how they were loading up on calls in front of the CPI. We had a nice pop, not much follow through here. I'm not ready to say, and like I said, we could rally and maybe it could stretch to 90, but I think that this is going to be a problem. Especially we'll see what happens with tariffs on Monday or Tuesday. But we have a little gap here, hasn't filled it. I can't be, I'm not going to short it unless we start closing under 85 again. And I'm doing enough that will take advantage of maybe rates are going to come down a bit because we have a growth scare. We'll take that a day at a time. And anyway, so you have a little different perspective. Should have had a good week. We had sells in the Dixie up at the 110 level. So that was 150 pips. Yen was 400 pips. And now we're looking to reload. You should have some money made on euro. I mean, it rallied from the second drive, 3.5, 170 pips. So decent week, and maybe we're going to have a chance to do it all over again. Watch its 102.50 level here in euro, and perhaps we get this three drive. It almost seems like it should happen because arithmetically, if we break under 102.50 and this was 350, you subtract 100 from 102.50 and you get 101.50 and a third drive to a bottom formation. But I'm holding longs. Even if they take out this level, I'm going to be a buyer down here. I'm planning to build a position on the short side of the dollar. I think in this instance, except for maybe early on, the president and his Treasury Secretary will get what they want in the dollar. So everyone remember, don't just count your pips, count your blessings. Adios. See you in the room. I posted some stuff in the room, and be careful out there going into this. You may want to have some puts, some hedges on. I'd be careful, be low leverage. And just like any other major news event, be ready to react to the reaction. So don't just count your pips, count your blessings. See you in the room. Adios.